YouTube channel. My name is Tokwe Abdulsalam, and in this video I'm going to be explaining to you step by step exactly what you need to do to master technical analysis as a complete beginner. This is the first video of 8 videos I'm going to be posting, breaking down how you need to master technical analysis as a complete beginner. So without wasting much of your time, let's get on the chart and let me show you what you are here to watch. This is the 1 hour chart on ZAR USD, which is gold, and I'm going to be explaining what an uptrend is and what a downtrend is. And as a beginner, as a complete beginner that doesn't know anything about forex trading, this is exactly what you need. The first instrument you need to know is what the trend is. If you don't understand what the trend is, no matter what the strategy that you are trying to learn, you can never grasp the concept. It was very hard for me when I started, and the moment I knew this, my trading became so easily. So let's get into it. As you can see, this movement here, from here up here, the market is in an uptrend. Sorry about that. And this movement from here to here, the market was in a downtrend. As a complete beginner, if you just maybe this is your first time trying to look at the chart, the first thing you should try to understand, especially on the 1 hour time frame and on the 4 hour time frame, is what the trend is. If you know how to position yourself and follow the trend, you are going to become a very good trader. A very good trader. That's not all you need to become a very good trader, but if you understand this, your trading is going to become very good. So let's put this down in writing so you can see. And let's give that the red color. So the red signifying the downtrend and the green signifying the uptrend. So what you will notice in an uptrend is that if the market is going up, so there are two things you need to pay attention to when you want to follow a trend. The first thing is the this is the fair value gap, and the second is what I personally call the institutional order flow. I learned this from my mentor, ICT, shout out ICT. And the institutional order flow is that in an uptrend, the last bearish candle should serve as a support if the trade is still valid in an uptrend. And as you can see it here yourself, see this last bearish candle. Let me highlight that for you so you can see what I'm talking about. And I'm not saying because I said it, you should believe it. Anything I tell you, go into your chart and backtest it yourself and see, that it's work. This is how the market works. It doesn't work in any other way. So this is what the last, as you can see, this is another last bearish candle here, and so on, so on, so on here. So you can see this. If the trend is still bullish, price must not break below this. We do not have a reaction from here, so that's okay, because I wouldn't be trading this anyway, and you understand why I wouldn't be trading here anyway in the next few minutes. But as you can see this candle, this, some people call it support, some people call it order block. So for me, I call it an order block, using it to follow the institutional flow. This candle, if the price is still bullish, price must not break this candle. I repeat, price must not break this candle. I'm not telling you to put your buy stop here. I'm not telling you to buy straight on this candle. What you want to do is wait for a reaction off of this candle. As you can see, we have a reaction here. We closed above this candle and we went up, and price came back, reacted inside this candle and went up again. So what did I say? What are the things that I said you need to understand? Fair value gap and order block. And you need to get a pen and write that down because it's very, very important. So after price reacted from this order block here, we have a fair value gap here. I'm not sure if you can see that, but let me mark that out for you so you can see. we have a fair value gap here. Going to Let me quickly change that to yellow. Yeah, so we have a fair value gap here. As you can see, the moment price reacted from here inside this fair value gap, this first fair value gap that we have, that has given us the confirmation that okay, the price is continuing the trend. We are not having any reversal, so we've already reacted to this. So inside this fair value gap, because this is a 1 hour time frame, we are going to drop down into the lower time frame to catch the entry. This is not going to I'm not going to be telling you exactly what the entry is on this particular video, but this video is the very first one of a series of video that I will gather. So it's going to be a playlist, and along the line I'm going to be explaining exactly how I use them and how you can also use them. But these are the things that I need you to understand first in this video: the fair value gap and the order block, how to just follow the trend that the market is currently printing. You can see inside this fair value gap, we came back, tapped into it, and that was an entry for another thing. As you can see, we broke this high, gave us another fair value gap. The price respected it, and our price is not going to always come back to the fair value gap, but when you know how to identify this fair value gap, you know how to set yourself up and wait for price to come inside the fair value gap before you take your trade. I'm still going to explain more to you and how you can take trades from fair value gap, but it's not in this video. It's going to be inside the next series of videos. You can see the institutional order flow, this order block, price is not closing below this order block. Anytime price comes back and see an order block, price is respecting it. So that is very, very important. I need you to write this down. In an uptrend, price is going to respect the last bearish candle. Price will not violate the last bearish candle, because if price should violate that candle, it means we have a shift in momentum. The same thing goes for the downtrend. If we are down, price should not violate the last up candle, because once price violates it, that means the market is identifying, it's showing you that it's about to reverse, and you should not be taking any trade. You should wait for a clear confirmation of where the market is going before you take a trade. You are going to blow a lot of accounts if you don't know how to identify this trade. It happens to me, it happens to every one of us. So you need to make things easy, to cut your journey short, know how to identify this trend. That's the reason why I'm doing this video. Know how to identify this trend, and your trading is going to be easy. So with that said, let's jump into this is how to follow the trend. So let's jump into how you can know when the trend is reversing and when you should not be taking any trade. Let me quickly delete this so we can work with the same clean canvas. So in this, remember I said in an uptrend, the last selling candle should be respected. It is the same thing as the downtrend. We are coming down, coming down, coming down, and this is the last. This at the point of reversal. This here, this candle right here. Let me mark that out. This candle right here. Just take this, put it down here. This candle right here, this green candle, this last buying candle, is the candle we are looking to support price or to resist price. If price should break above it, then we have what we call break in structure. So the market has broken structure, but that alone doesn't give us the confirmation that the market is reversing, because when you look at your left side, you are going to see a very close swing high there, and most of the time the market might just come and take out that swing high and continue selling. So what you want to wait for is wait for the market to take out that high, take out this high, and close above it. So let's say market structure shifts after taking out this high and we have a strong close above it, then I have a confirmation that the market structure has shifted. So any pullback inside this area, I'm looking for this other block right here to support price, or this fair value gap to support price. As you can see, once we close inside this area, we have an order block that gave us what we needed after the market structure shifted. So I really need you to watch this video and understand exactly what I'm saying. And if you don't understand anything, let me know in the comments. I'll be there, and I'll be attending to you guys. So yeah, that's going to be the end of this particular video, and I really wish you understand this.